I have had the enormous pleasure of working with Greybrook Realty Partners, a company that has been crowdfunding for a very long time, has $20 billion of projects under development, 8,000 active investors, and one of the most finely tuned development and investor relations systems in the real estate industry. And I am delighted to introduce you today to their CEO, Peter Politis. Hi, Adam Gower here. I'm building digital marketing systems for sponsors, as we do, so that they can find investors online. Brings me into contact with a lot of companies. And having come to know Greybrook as I have over the last few months, I've discovered that they lead the industry in best practices in a number of key areas of real estate development. That they have an investment advisory specifically oriented to investors is, as far as I know, unique, and that they cross-pollinate development intelligence across their developer network is also exceptional. These are just two examples of how Greybrook add value to every step of their relationship with both investors and developers. And today's podcast is unusual in that I know my guest and his company pretty well. So what you're getting in this episode is like the Cliff's Notes of best practices for how to operate a real estate crowdfunding company or even platform, because you're going to hear Peter's answers to specific questions that I know reveal guidance and insights of where they excel that you can use. You can find out more about Peter and Greybrook on the podcast page for today's episode at gowercrowd.com. Be sure to subscribe to the Gower Crowd newsletter. It's totally free, and it is the only source on the web that focuses exclusively on real estate crowdfunding for both passive investors and professional real estate veterans, and it includes everything you could possibly want to get you on the road or even take you further on your journey to real estate crowdfunding. Subscribe there at gowercrowd.com. Okay, fasten your seatbelts because Peter speaks at about twice the usual word rate per minute than anyone else I know, and every single word is worth listening to. Ladies and gentlemen, please switch off all distractions and hear now from Greybrook's CEO, Peter Politis. Peter, what a pleasure it is to see you. It's always an enormous pleasure. And I'm going to ask you to kick off, if you would, because normally I like to ask a very specific question, but you guys at Greybrook are so huge that I would like everyone that's listening, that one guy that's listening today, I would like him to know more about Greybrook. Give me a sense of the scale, like your AUM, units under production, number of active investors. Just give me a sense of the scale of Greybrook.
Yeah, sure. So thanks very much for having me. It's always a pleasure. And I'm Peter Politis. I'm the CEO of Greybrook Realty. And, it's interesting because, over the years, as we kind of expanded into different verticals in different cities and states and countries in many cases, you kind of just keep working hard. And at the end of the day, when you ultimately get somewhere, you say, wow, there's a lot of different stuff going on. And we're really proud of that. And in development, we look at things a little bit differently. There's assets under management in terms of equity, there's gross development value, there's number of units, there's square footage, and everyone seems to speak all sorts of different languages or nomenclatures. So in terms of development value, we have over $20 billion currently actively under development. Active developments are about 75 or so developments, and that can be from for sale residential to purpose-built rental or multifamily to different commercial developments as well. Right now, in terms of number of square feet, we're somewhere between 45 million and 50 million square feet under development. And number of units, around 25 to 30,000 units or so, somewhere in that range.
That's an extraordinary scale. All right. So tell me something about the origins of the business. Where do you guys come from? And what I'm particularly interested in is this family, this sense of family that has evolved over the years.
Yeah, I mean, Greybrook has three principals and partners. It's myself, Sasha Chichus, and Elias Van Vakis. And, I've been with Elias and Sasha now for going on 18 years, which I'm now aging myself just a little bit. But it's a partnership that's, I guess, started off as a business relationship that's probably as close as family today, or more so in some cases. And we've taken that growth and culture. We're based out of Toronto. but we have offices in Toronto. We have a lot of developments in South Florida. We have an office actually in Tel Aviv in Israel, and a satellite office in Vancouver. So for us, the company has grown in terms of scale and locations, but rooted out of Toronto. I was actually born in Toronto, but I was raised in South Florida. I grew up in Miami. I went to school down there, and then once the business was formed, it was literally at some point almost 20 years ago, 3 guys and no employees necessarily. I was the CEO, the janitor, the secretary, the analyst, all those things as with Sasha we were doing this, and now we've grown to about 80 people right now, or 85 people, and all professionals on the investment and development side, and really some of the relationships that have formed from people that we've had known most of our lives. We have school friends that are general counsels who went and got their MBAs and their law degrees. We have our head of capital markets that went to University of Toronto with me. We were fortunate enough, and I was fortunate enough to meet a lot of really good, smart people along the way that whether it was through school or personal relationships that we met. And when we had a vision of building a business, we thought, what could be better than doing something we like with the people that we do like? And when I have a business meeting here on a Wednesday, if you come to my house on a Super Bowl party, you'll see 30% of those people at my house for a party. And I think it's been a nice culture. It's what allows us to work so hard every day, because it's a hardworking culture. But when you're working and you're looking for the person that you're working for and how hard they're working for you, I think it makes it a lot easier.
One of the times that you and I spoke before, I asked you a very specific question. What do you look for in a sponsor? How do you find new sponsors? And you responded by telling me, well, we don't really do that anymore. We have these relationships. Just describe that in the context of this idea that you're a kind of an integrated family. You have this deep network internally of people who all know each other.
Yeah, I think that the development community. Sorry.
Yes,
sorry about
slide down as well.
I was like, how much for a good laptop? The development community in Toronto is really small in a sense that the number of people who do things of scale are very well-known organizations and people with very large balance sheets. Not to say that there isn't a lot of people doing it, but there's a number of people doing it on scale, and it's a community that's very well known. And there are people who are very good at being developers that maybe don't make the best partners. There are people that make great partners, maybe aren't so good at development. And by knowing the inner fabric of developers and development and what goes on, we've managed to form these partnerships that started off as business relationships 20 years ago that have now become personal relationships. We're personally entwined with our developers' lives and their private lives, and we're friends, and we have intimate knowledge of their balance sheet and their troubles and the good and the bad and what they look for. And we've been led into this inner circle a long time ago, in this trusted inner circle. And we've managed to say that we keep it to a tight circle. I mean, the number of people that are looking for equity investment in real estate, like that line could circumnavigate the globe 5 times over, right? But we invest in balance sheet, in organizational infrastructure, in people, relationships. I mean, we don't look at legal docs in terms of obligations. We don't say what rights we do and do not have. Everything's done through such a collaborative way that they want to know what we think. They want to know if there's positive or negative. They don't care what they're contractually obligated to do, and we're not caring. At the end of the day, we're all in it for profit, and we're all in it for risk reward mitigations, and all working towards a common goal. And when you've done that for so many years, it's now like you're just an extension of their own organization or their own family, or their own friends. And now it's like we want to be partners because we enjoy working together. And that's probably the best privilege that we have today, is the people that we choose to work with, we actually have a choice. And the people that we work with could work with us or anybody else in many cases. And we're lucky enough to have forged these relationships for a long period of time, that we have a common goal of success. And we see eye to eye. There's not a lot of times when there's an issue or a problem and we try to dissect it, where someone's saying, we're saying white and they're saying black. We've grown to each other's cultures over the years.
Peter, before I ask you the follow-up question to that, do you mind just tilting your camera a little bit so that you're not right at the bottom of the picture?
Sorry about that.
Yeah, no problem.
You know what happened? Hold on a second. That's what happened. my camera. This is that's, you know what? Is that okay?
Yeah.
Good.
So with sponsors, what I find fascinating about Greybrook is that you have these relationships with a bunch of sponsors who are all independent, but you're like a center of gravity. You know what each one of them is doing, and you're able to extract best practices. You learn something, you contribute to those relationships, but you acquire best practices by seeing what individual sponsors are doing, and then cross-fertilize that across your network. We'll talk about that, because that's incredible value add that most sponsors like you don't have.
Yeah, I mean, I think that's a really important key, that our ability to intimately know how every one of these large organizations run their business. First of all, every developer thinks they're the best developer, and they build the best, and they build the cheapest and the fastest. They get the best, loans from the banks and all that stuff. That's just like standard for all these guys that are big guys. Like, everyone will say they do the best of that. But the truth of the matter is that we see what all these guys do, and we can see how certain construction strategies work. We can see how they deal to negotiate with trades opposite the banks, broker relationships, what brokers are moving product in one developer's inventory but not another, and why they're not, and how we can go ahead and bring all these, basically the biggest and the best that each one have to offer, how we can, if someone isn't seeing things the right way, we can add value, our ability to do that. And especially in a market like development, where what trades charge you for things, what banks do, how brokers are treated, dealing with urban planning and design, architects, all that stuff. I mean, unlike income producing properties where you have a building and you say, here's the tenant, here's the lease, and here's my operating income, and here's my expenses, and there's my net income. You look at development, it's like a blank slate. So your ability to see through all these things and make sure that you're operating at the best practices. And then the truth is that seeing your partners now implement these best practices, that then you don't have to then implement them anymore. It's like we're all getting a little bigger, better, faster, stronger together. And I think that's been such a key to our partnerships, is that we make them better and they make us better in different ways as well.
Exactly. And because of the relationships and the type of relationship you have with these folks, you said every developer thinks they're the best, right? Basically operating in a world of what is it called? What is it? A personalities, or
that's right.
So they're responsive to your input, aren't they? They like to hear
it. I think that because because of our scale, it's not even like, oh, Greybrook or Peter or somebody that has an opinion. It's like, I don't have to explain how informed our opinion is, or if it's a guess, because we just did what we're about to do today 8 times last week with 8 different people, and we've lived the results, both good and bad, right? And that is, I think, probably the thing that I appreciate the most about the information, is how we share information, but not in a way where we're compromising each other and our other partners, right? Like, we sit in a position of very, very sensitive information. How we govern ourselves opposite our partners and opposite our people and opposite all that stuff is very important, but we're still able to go ahead and deploy our knowledge and expertise and have a discussion about what works and what doesn't. I mean, I tell everybody, we're kind of like the J curve of change in this world, right? A day today is like, a week or 10 days or 2 weeks 20 years ago. And it's just getting that way. So it's very important now that if you're not always looking at something with a critical eye, because we did it that way last year, doesn't mean that's the right decision this year. And that mentality is something that I think is not prevalent in development. Like, it's much more of a wash, rinse, repeat, try, true, test. I'm not saying that stuff isn't accurate and not reasonable, but that's your base. And after that, every day is critical thinking and like, what happened yesterday? What are we trying to do tomorrow? And what decisions to be made today?
Well, you live in a world, people live in a world that we're so consumed with our day-to-day activities that we end up becoming blinkered. We only know what is within our own ecosystem, and we self-select information that supports that. When you have a partner like you, who is able to bring insights from other experts in the field. It must be very valuable for your partners.
For sure. And we've also managed to fill from time to time organizational gaps. If there's a strategy or implementation that our partner on the project hasn't done before, because we've done and seen it, we can take the lead and actually be part of the execution team at different stages of the development, whether it's city planning, whether it's financing, whether it's the disposition of assets, like all these things that we can step in. Like we are not just like a resource of information, but we are an execution resource for our partners as well. And our team is built to be execution. And usually like the investing world and the development world are like two different things. They're a little bit like oil and water. They don't go like, we are investment professionals, but we're built to execute development day to day.
Now you have you mentioned 75 projects, 20 billion in development with a B, just to be clear, anyone missed that, 20 billion in development. How many sponsors do you work with, and what's kind of the what's the lifespan of those sponsors with you?
Yeah, we've only done one project with one developer once in our nearly 20 years of history. Everyone else is, multiple projects. I don't know that we have any relationships that are under a decade old, really. And for us, I think what's really important is that when we partner with somebody, their mentality is to partner with us on a number of things. There's not a lot of value in us, how deep we get organizationally and get intertwined to do a deal, no matter how good or big one deal is. But, I would say that we probably have worked with about a dozen or 14 sponsors over the time. And, most of our volume is now over 8 or 9 different organizations.
And you are exclusively ground up, aren't you?
We are predominantly ground up. Like everything, it's tough when you're talking about 20 billion of development with a B, and I say we have a value add division that we run, and we have 2,500 units and a few $100 million of assets. Like the answer is it exists, and in itself not insignificant. But when you're talking about relative scale of development to value add, it's hard, it's hard to compete with that big number. But we have a few $100 million of value add buildings that we're constantly out there acquiring new. And that's what I would say a smaller part of what we do, but only because the other stuff is so relatively big.
Well, one of the reason that I asked that is that being predominantly ground up, what investors are becoming used to as crowdfunding expands is immediate returns, right? You make an investment and you're going to get your dividends from month one or quarter one or whatever, but you're ground up, which means much longer tails before investors get returns. And that's been your business model.
Yeah.
So how do you deal with the question that new investors that come to you that maybe don't know you, how do you deal with that discussion when somebody says, wait a minute, I'm going to invest 100,000 and I'm not going to see anything for 5 years? How do you address that? And are you noticing it as being more prevalent that people are concerned about that? Is that a problem for you?
Yeah, so it's actually funny you say that. 20 years ago, now we have over 8,000 investors in 32 different countries, right? Most of which through word of mouth. We report in multiple languages, right? All this stuff. 20 years ago, when it was us starting the business, most people said, no one's ever going to do this. No one's ever going to invest in an illiquid, ground up development for 3, 5, 7, 10 years, depending on size of project scale or whatever. And the truth is that what I think people will do is make good investments. And that is in the proportion of their portfolio. If somebody has $100,000 and that's all their investable assets, which is probably development, might not be for you then, and you need to live off of income off that, I have news for you. Illiquid investments, as good as they might be for 5 years, even if they're going to double your money in 5 years, it's not for you. So what we found is that what's actually been interesting is a couple fold. One, more people are looking to alternative investments than ever before. More people are looking to make investments that can generate a meaningful return than ever before. And the factual reality is that development can do that. You have to know what you're doing. You have to execute it properly. You have to trust the person you're doing. And so those returns are available in this space. Now, the question is, who do you do it with if it's appropriate for your portfolio? And now, even institutions, pension plans, sovereign wealth, their alternative investment allocation has gone way up because of all the obvious reasons. What's going on in the market, what's going on in yield, what's going on in bond rates. Those are all real things. And we're not even gotten into the details of like, how is income taxed in real estate versus gains on development, right? So when you tell this whole story, at the end of the day, I think if you're a qualified investor for development, which again, not everyone necessarily is, it's a compelling enough story to say, yeah, it's worth the illiquid aspect for a portion of my portfolio. And that's really how we put it. We try to build a portfolio for people, not, here, give me $1 for this. You should put every dollar you want to put in development into this one project.
Perfect. You've actually nailed on the head, or whatever, anyway, my next exact point. And that is that you're not encouraging people to invest everything in ground up. It's part of a portfolio. And what's particularly interesting, I find about Greybrook, is that you have 8,000 investors, 32 countries. Was it 32 countries? I actually, my note here said 6,800 investors. So I'm hoping that that 1,200 is a direct result of some of the work that we did together.
That's right.
That delta. But what you have that's very different is that you have an advisory function. So investors don't go from discovery on LinkedIn all the way through to writing a check. There's an intermediate stage, isn't there, where you advise people. That's unusual. Tell me about that.
Yeah, I mean, we're a regulated entity in the US and in Canada and the jurisdictions that we operate in. For us, our job is to understand suitability, investment horizons, portfolios, asset allocations. Like, we're not like, you see sponsors or developers that are out there saying, give me money for my deal because my deal is the best deal. I'm going to go execute it and give it money for me. We're agnostic as to where this money goes in terms of who our opposite partners are. We just want to go find the best thing. So right there, inherently, the person that's asking you to invest in them, instead of being the direct sponsor, like, who manages that person? They have their own interests at the end of the day that they're managing through. They're not managing you as the investor's interest. So where we sit as an asset manager is, I'm on the side of the money. I'm not on the side of the developer who's looking for money. I'm sitting there saying, we have expertise across development. Our job is to go out there and find the best one. Doesn't matter who the development partners are. And then we will sit and have a tailored portfolio for each individual person based on asset allocation, investment horizons, goals, all those things. If you're 85 years old and you want your money in, a monthly check instead of waiting 5 years, maybe it's not for you. But the person who's saying, no, give me your money. And then when you're actually in the development, every single day we're in there representing the money. And sometimes that's not necessarily eye to eye in terms of a conflict of interest with the developer. So when you're working with these guys on a direct basis, who's looking after your money? They're looking after themselves at the end of the day, because that's organizationally what they're going to do. We have a fiduciary duty to the capital, and that's where we sit. And frankly, we are equipped to assess the validity of the information that we're getting from these development partners. Most people who are investing through crowdfunding are going to read a number, and 99.9% of them will have no idea if that's crazy, aggressive, conservative, unrealistic, problematic, old, new. They have no context. And we provide all of that context every day.
Let's drill down on this point, because this is another substantial differentiating quality of Greybrook. When an investor first comes to commercial real estate through crowdfunding, they're going to be writing a relatively small check, $25, $50, $100,000, certainly not enough to move the needle in terms of negotiating terms and conditions with a sponsor.
Sure.
So what you find is that sponsors deliver as is contract. If you don't like the contract, don't invest. So that creates a hazard, or potentially creates a hazard for investors that you really, at the end of the day, probably don't have any rights or responsibilities or controls. But you're different, because you are, as you've been describing, you are the investor. you aggregate, forgive me if I'm using terms that you wouldn't use yourself, but you aggregate investor capital and then place it in substantial enough amounts with sponsors that you can negotiate rights and responsibilities. Talk about that. It's very interesting.
Yeah, I mean, not only a couple of things, whether somebody writes a check for 20 million in a project or 50,000, all the terms, conditions, fees are identical. So there's no class of shares. We negotiate the best deal for everyone. I don't care what your check size is, number one. Number two, outside of the co-investment of our development partner, we are 100% of the balance of the equity. So forget about negotiating the contract, because the contract is like a very important thing and it's where people's minds go initially. But I've got news for you. Developments are like living, breathing things. Over the next half decade or 3 to 7 years, however long these things are, the world changes many times over. So every decision of any kind of financial consequence is made on a unanimous basis with them and with us. So regardless of what a contract says, they can't go get financing, sell a unit, rent a unit, dispose of it, hire a construction manager, and enter a trade discussion. None of those things can happen. We're there day in and day out, not just from a contractual beginning, because none of these investors would have any ability to know what's going on, what's changed, good or bad, what critical decisions need to be made. And we talked about this earlier, the level of insight we can bring to our partnerships to help make the best, most informed, real-time critical decision is like, I don't know how you quantify that in value at the end of the day. So for us, our job is to manage these things like really actively on an ongoing basis. Of course, we can negotiate the terms up front because of the check that we're writing, but it's much more than that. Like it's every day you need to be successful and make the right decisions throughout the course of many years in order to make a development successful in our view.
Totally different subject. When we first started working together, I knew that I was in trouble because I discovered society living. And all I wanted to do, I told my wife, do you mind if I run away and move into one of these buildings? They look so amazing. Tell me about society living. It's absolutely fantastic. What is it?
Yeah, this is something that we're super excited about. It's our multifamily ground up rental platform in partnership with PMG Property Markets Group. That's a national platform today. And our idea is a couple things. One, we look for major growth cities. So we have stuff in Miami, Fort Lauderdale, Atlanta, Denver. PMG has stuff in Phoenix and Chicago and other places as well. And it's really, we want to deliver a living experience in the best locations in the city, but for the lowest total dollars. And the answer is, well, that sounds next to impossible to do. And it's actually not. It can be a very successful financial model. And we build these buildings that have a percentage of co-living in these buildings, number one. So when someone hears co-living, first they think of student residence, dorm, cheap, mass turnover. These are luxury buildings that have essentially created these social environments where you may only be able to afford a bedroom, even though you have your own bathroom and you may have roommate matching, but you're living in an experience in these buildings. We have gyms that are the size of Equinox. We have, events like whiskey tasting and cooking classes, pool, bar, F&B. One of the newest amenities that we've been constantly putting in our new developments now is like a hair salon that's included in as part of the package of the rent. So, guys and more girls than guys are going out before they're getting ready and they're having a drink with their girls. It's like going down. We have an app-based system where we don't have keys. If you're coming over to my place, you're staying for a week, I could go ahead and give you a virtual key. It's essentially creating a living a community where we kind of joke that we cure loneliness. And you start by, you can rent a bedroom, but you can rent a regular, a studio or a 1-bedroom or a 2-bed. And we see that people move throughout the buildings. And at the end of the day, we create these environments that it's a lifestyle, not just a building. And whether someone can spend $1,200 a month or they can spend $4,000 a month, you can live in the same building, have the same types of amenities, and we do roommate matching, and we include furnished suites in some cases, and there's internet, and there's all these events. So like all these things that you pay for, ultimately, you get this ability to essentially live in these developments. And I want to say this without being disparaging to other buildings, but they're intelligently designed spaces. And coming from Toronto, we are the kings of building small units that are efficient because we have a space issue, we have a high demand, we have affordability issues, and now we have 500-600 square foot units that are extremely efficiently designed. So we can create systems where people live inside and outside of their units. And while there's slightly smaller spaces, you're living in the entirety of a building's ecosystem for the least amount of total dollars. But as a developer and an investment developer, the per square foot rent is typically a little higher than average, thus creating the financial model as to why I can get. And by the way, the demand for these things are just outstanding for the people.
It's interesting. Nothing remotely close to the excellence of what you just described. But when I was first developing in San Diego in the early 80s, we built these small efficiency units. And the way that we figured out how to design them actually was by going to Japan. And we looked at the way that space is used in these tiny units and actually were able to create really comfortable living quarters that using good design. Now, in society living, the way that I think of society living is it's a bit like living on a cruise ship. Actually, you've got everything you want, everything's paid for.
Yeah, we actually hear that. Surprisingly, we hear that a lot.
So you also have workplaces as well, don't you, where people can
We have co-working stations. I mean, literally everything you could imagine is sitting there. So like your co-working space is included, your gym's included. We have classes, we have spin, we have weights, we have pools, we have events, we have yoga, we have movie nights. I mean, we do all these things where if you provide a product in life, just anything, at the end of the day, if you can get it anywhere or it's generic, it's just going to come down to price and nothing else. And then relationship, every car is the same. Whoever offers me the cheapest car I'm going to have. If everything tastes the same, whoever offers me the food. And people today, I think, especially, the younger generation, which is more adept to moving, less adept to home ownership. So we have that going for us as well in terms of the demand, is that everyone's looking to buy experiences. That's what they want today. And creating these experiences where people don't want to move out of the building. If they started off renting a bedroom, they want to stay there with a junior one bedroom, or they have a girlfriend or boyfriend or both. They want to, get a 1 or 2 bedroom unit, and they want to stay in the building because the living experience of being in this building, when you go down into the coffee house and it's all part of your lobby and it's integrated and everyone, at the end of the day, that's what's going to drive value. And I won't tell you who it was, but we put one of these assets up for sale, and tremendous interest. And one of the institutions that really liked it, they're Toronto-based institution that also works down in the U.S. They were really interested, and they made a really funny thing. They're like, "We're not nearly cool enough to run this building. Like, how can you guys help us run it after? Like, this is amazing. Like, this is amazing, but I don't know if I can do this, right?" And that's important. Like, we're creating these living experiences, and by people knowing the Society brand, they know that that's the level of experience that is, whether you're living in Society in Miami or in Wynwood, or you're living in Society in Denver, or Society in Atlanta, or all these other places. I mean, this is what's really important, that they know the type of product they're getting.
See, I actually had the complete opposite reaction when I saw Society. I thought, I'm way too cool for Society. But actually, the doubt that I did have in my mind about that is that it seems to be oriented to single people. How do family, do you have many families? How do people evolve when they get married and have kids, etc.?
Yeah, I would say the one thing is that people just assume that young people want to live there. So the thing that we do have is literally people of all ages that live in these buildings for many reasons. If you're, pick an age, like everyone thinks, oh, it's like 20 to 35 years old. If you're 55 years old and you got transferred to Denver and you want to live in a nice area, in a nice building that has all these amenities and things and meet people, like what else could you want? It's not geared towards that. We do have from time to time families that have young kids that live there that get bigger bedrooms. I think it's a smaller percentage of the people, only because they typically would go to a single family rental for more space or other stuff. Like there is that availability, but the age demographic is like top to bottom. But like the answer is, why do I at some age stop wanting to live in a beautiful building with lots of amenities that has the option, not the obligation, but the option of having a movie night or events or cooking or going like what, or even just people who want to be around things like, you know, the simplest thing of like, why does somebody go down to a coffee shop? Half the time they're just watching at what people are doing around. They're not like that. Like that to me is not, it's not a factor of age. It's just a question of whether I rent or whether I own. And everyone's going to want to live in that kind of building. If somebody wants a boutique exclusive building with 15 units and a private elevator into your room, well, you can't get that at society, but you can get a lot of other things.
You know, it's interesting. You guys have a long-term perspective on everything you do. I know that. It almost sounds like the natural evolution for you in the next 10 or 20 years is actually senior housing, right?
You know, it's actually, it's a real issue in terms of the demand that I think is there. We're already going to find that we're behind. We haven't developed enough for how much we're going to need sooner rather than later. But our general view is we are trying to add value. I'm not saying that there's not value that we can add in the senior housing, but we don't do that today just yet. But to buy something and to essentially clip a coupon or add no value and say, I bought something and that's the service I'm providing you, that to me is very replaceable. There's lots of people that can do that. Seeing something that doesn't exist today and being able to create it into something, and that goes for seniors housing, it goes for rental, it goes for for sale stuff. You know, we're doing a Waldorf Astoria residences in Miami. It's the tallest building south of Manhattan. That to me is adding value for investors, and that's something that not many people can do. And that's something that we've just because we started in here 20 years ago, we developed a specialized skill set. I mean, I didn't know development was the hardest thing to do in real estate when we started 20 years ago. It's just where we started, right? It turned out that it was, and it turned out that we got a bit smart on it and did a few things, and now it's allowing us to operate in that way.
Peter, so what are the biggest challenges that Greybrook faces at the moment, and how are you overcoming them?
Yeah, I think that development in itself is challenging because so many things move from time to time. I think inherently there's more variables in development. So as a very simple example, during the pandemic, lumber prices went up 500%. Problem that a year, like 15 years before that, for 15 years, lumber had been super stable, not an issue, right? Steel, same difference. Lockdowns, ability to actually construct, all these things. Like the thing that is about development is that, and this is why it's so important, our relationship with not just the scale that we have, but how we operate ongoing for our investors, with our partners, is that the challenge is that there's always a new challenge tomorrow. And you don't always know what that is, and you can't always pre-plan for it. So I always tell all of our guys on our asset management team, our job is to be two things: problem solvers and to enact results. That's our job. The answer isn't, I didn't think about that or I didn't know, because that's the nature of development. Of course, there's things that come up that are like, I've seen that 1,000 times. This is how we deal with it. No big deal. But there's a lot of things that the challenge of development is you have to be like smart and on it all the time. There's no autopilot in development. It's critical thinking all the time. How do you tie all the things together financially? How do the ripple effects of your decisions? If I do this, what happens to our timeline, to our returns, to our financing, to our equity? These are all things that we spend a lot of time thinking through, because there isn't like, I signed a tenant and I'm getting a lease for $1. I mean, there is in our rental side of it, but there's so many things that ripple out into the next half decade of this development that you always need to make sure that you're forward thinking through that. And that's where our long-term thinking, like our decisions are multi-year decisions, right? It's like the old, the CEO of REITs always complain, you know, I'm making 5, 10, 20-year decisions, but I'm judged quarter to quarter.
Yes,
right?
exactly.
Like that's the inherent complication. We are making all these long-term decisions, and we have to weigh many, many things while making those decisions. I think that's the thing that is that we face all the time, is we always have to be prepared for something that we didn't think about and how to tackle those problems.
Okay, so what are the biggest opportunities for Greybrook, and where are you headed?
Yeah, I mean, I think for us, we we think that there's lots of opportunity in the spaces that we're currently in, like just for sale development or society brand. But I think for us, one of the best things that we can offer our people is like broad-based diversification. So we were heavily in Florida for our society brand. We moved into Georgia. We moved into Colorado. We're looking at, up and down the coast of Florida. We're looking at stuff in Charlotte as an example. So where are we headed? When we started in Toronto, we invested in Toronto. Now the greater Toronto area has many cities, many municipalities. We've gone out and we've branched out. So I think we're going to continue to branch out into the different places that we invest, because we said it at the beginning, our job is to create portfolios for these people. So imagine saying, what's a great sector? The tech sector. And the tech sector is where you should invest. And you should invest in it in every tech sector, in every company, 100% of your stock portfolio. That doesn't make any sense, right? As great as Toronto may be, or South Florida, or Colorado, or develop, you need to be diversified. So as we grow, our ability to diversify geographic locations, product types, project durations, sponsors, all those things, like, the condo market in Toronto is strong. The housing market can be slower in terms of selling houses. Those things can flip flop. Selling condos in Miami, we all know, can ebb and flow in terms of demand. Right now, it's so strong, and the demand for our product in Waldorf is great. But 4 years ago or 3 years ago, there was less demand. So our job is to continue having access to opportunities across a broad range of geographies, because at the end of the day, that's how you create a balanced portfolio. I'm going to buy bonds, I'm going to buy banks, I'm going to buy REITs, I'm going to buy tech, I'm going to buy all those things. I don't care how great Amazon is, or Walmart, or Microsoft, or Wells, whatever thing you think is the best stock, Bitcoin, whatever you want. There's no company or long-term investment portfolio or platform where you can only do one thing. And that's how we see the world. We want to do many things, because at the end of the day, our job is to diversify risk and create kind of private equity-like returns for our guys.
Peter, I can't believe I was looking at about 20 minutes. I was thinking, oh my goodness, I'm going to wrap up any minute. Now we're almost at an hour. I can't believe it. Let's wrap up. I know we could keep on going. I've got 3 sign-off questions. The first one that I ask all my guests, the first of those 3 is, these more personal questions. Sure. What are the key daily habits that you have that keep you successful?
Yeah, I think working hard is an important habit. And I think that most people don't realize how hard you need to work to be successful. And I, it's kind of like the sports analogy, like hustle is a skill. Working hard, I find that a lot of people have these generically large aspirations, but few are willing to work as hard as you actually need to, or sacrifice as much as you need to actually reach them. So that may mean that you don't actually want to reach them enough to do it, not whether you can or those things. And I think the daily habit of like working as hard and setting an example for our people, like I don't say this lightly. The reason that they work so hard in terms of our employees is they see how hard I work. I'm not in and out here for 3 hours in a day and then I go about my day. I'm working harder than anyone else is. And I think that mentality is very important to be successful.
Second question, what's been the hardest lesson you've learned in real estate?
I think the hardest lesson is how long it all really takes to actually do, right? Everybody, like, people want instant gratification. They want results tomorrow. They want to buy a stock yesterday and make money today and move on and have this. It's you're telling a story to people, and at the beginning, people don't necessarily realize how long 3, 5, 7, 8 years are, how many years of work it is. And the person who was super excited to do it realizes that it takes time, right? And it's managing expectations, about talking to these people, about keeping them informed. And I think that you don't appreciate the living, breathing, ongoing, multi-year nature of the commitment that you make. At the beginning, like early on in our stuff, it was always like, yeah. And now, we just closed a project this last week. That was an 11-year development, right? And the commitments of these things, of like what it takes to actually execute this stuff, is probably something that we all underestimated, 20 years ago, when we didn't know as much as we did today. And I think that's something that generally speaking is something that you have to constantly manage, because that is the lifeline of the business, is the communication with our partners and our investors.
Now, it's a funny thing that you say the hardest lesson was how long it takes, but it's also reinforced when you look back, when you close this 11-year deal and you're just so happy you started it.
Yeah, that's actually very, very accurate. And that's something that we talk a lot about here, is that at the end of these, it's so important at the end of these projects to look back, not just to celebrate your successes, but to see what we did, what decisions we made, how they affect our future decisions. And that at the end of the day, it's hard to do something for years and years and years before you get financially compensated. At the end of the day, that we didn't talk a lot about this, but how Greybrook really makes their money is we make our money off sharing the profits at the end of these developments. So when you're running an organization, you wait as many years as the investors wait to be compensated. That's what we wait to be compensated. And organizationally, that's something that it was a lesson that you did appreciate enough at the beginning, but it's something very important when you're managing and running a business. Understand that.
My last question, I'm going to change it on the fly. Actually, normally I ask, what would you advise somebody who is thinking about investing in real estate for the first time? What should they keep in mind? But I'm actually going to switch that up a little bit. And instead, if somebody were to tune into this podcast, not a radio show, but just imagine it was out live and that was it. And the only thing that they were to hear is what you say now about Greybrook, what would you want them to hear? What would you want them to take away?
I think the thing that I want them to take away is that in any investing, you invest in people. I don't think that a project or anything along those, the numbers of a project are not relevant. The execution and the people that do it. I can show you the best corners of real estate that made no money in the wrong people's hands. I can show you mediocre things that were smashing successes with execution. And at the end of the day, in any business, you should invest in the people first. Obviously, the numbers have to make sense. And I think that we are the kind of people that people should align themselves with. We put our investors first. We co-invest alongside them at all these things. And the experience that we bring to the table with the kind of people that we are, I think is what's made us successful. I think that can't be overlooked.
Peter Politis, CEO at Greybrook Realty Partners. Thank you so very much for joining me on the show today.
Thank you very much for having me.
That was Peter Politis, CEO, Greybrook Realty Partners. You've just spent a few minutes with one of the top real estate crowdfunders in the world, even if he might prefer another epithet, maybe top developer. Be sure to go to gowercrowd.com and sign up for our newsletter. It's the only resource of its kind that focuses exclusively on the world of real estate crowdfunding. It's totally free and it covers all the latest news updates and information that you could want on the industry, all there at gowercrowd.com. Thank you for joining me today, Peter Politis, CEO, Greybrook Realty Partners, and thank you for listening in. That's all for today. Be well, stay safe, and for now, this is Adam Gower signing off.